Welcome back, and you're watching Buy Now Sell Now on ET Now. No, let's just talk about the renewable energy space. Now, Tata Power has actually signed a deal with Black Rock, and they are looking to raise around 4,000 crores for their renewable energy business. So we are joined today by Mr. Praveer Sinha, who is the MD and CEO at Tata Power, to understand more about what is happening with this deal. What will they be looking at doing with the renewable energy business as well. Thank you so much, Mr. Sinha, for joining in with us on ET Now. And I will dive right in and talk about this 4,000 crore equity that you're raising. Does this actually take care of the equity needed for the foreseeable future, or are you looking at any demerging of the renewable arm at some point and doing a separate IPO for that?
So at present, the 4,000 crore investment that will come will be more than adequate to meet our equity requirement for at least next 18 months, so 12 to 18 months. And that's what we are looking at, this investment. And maybe as the business grows and the internal revenues also increase, that will then become self-sustaining in the future for the future growth.
Good morning, Mr. Sinha. This is Cheryl also joining in the conversation. The final shareholding in the consortium will be in the range of about 9.5% to 11.5%. Could you tell us what are the conditions precedent or the base assumptions that you have actually taken for that? And on account of that, what could be the upside in the valuation?
So the present valuation is based on the of 34,000 crore of value that has been considered as the base value. There is a cap and there is also a minimum that has been considered, which is typically in such transactions about 10% plus minus 10%. So if you perform better than what has been envisaged, then you get a higher valuation. And if you perform lesser than what is the base value, you will get a lower valuation. And that's why the stake will range between 9.7 to 11.4%.
Mr. Sinha, but we did see some negative reaction coming in on the stock price because the analysts actually believe that some of the nascent businesses like EV charging hasn't still gotten full value of its potential. What would be your comment on that?
There are two aspects that we need to consider. One is that if you consider this on a like-to-like basis for any renewable business, we've got a much higher valuation compared to any other transaction which has happened till now. So this is a benchmark in terms of the valuation that has happened for any renewable. Also considering that this is just not utility scale, but also it is EPC and manufacturing. So it's a whole portfolio of a renewable business that is being offered. Secondly, as far as the EV is concerned, it's too premature to give a great value to the EV business. We've just started rolling out in last 2 years, but it has huge potential, and that valuation will come in the future when the traction takes place and there's more of penetration of electric vehicles in the market. So I think what we need to look at it is that it has set a base value and it will only improve going forward. And that's what is the important lesson from this, that for all the investors, they should be looking at what is the long-term value creation rather than saying that what is the present value of the business.
Mr. Sinha, let's shift focus now to your other businesses. You've seen the coal prices, actually they've more than doubled on a year-on-year basis, and on account of that, we're actually expecting some sort of a windfall in the coal mining business. What is your sense regarding the same?
Yeah, we do expect that the coal prices will remain a little higher in at least for next 2 quarters, and we will have a much better realization for our coal business in Indonesia. So we do expect a much better return in the coal business in the next 2 quarters, and that's what we are looking at when we look at the KPC operations and our stake in that and what sort of returns we can expect from them.
Right, Mr. Sinan, just sticking with the coal business, you had earlier mentioned that on account of the ESG focus, you might be looking at divesting the stake in coal mines. Now, is that something that you have planned in the immediate future, given that right now we are at the peak of the valuation? So, that will make an attractive divestment also for you. So, what's your take on that?
See, now, whenever we look at divestment, we need to look at it that what is the benefit that it is giving to our stakeholders, and if our shareholders are getting a much better valuation, then we can consider that. But at today's prices, and this again is because of recent developments that has happened globally, where the energy prices have gone up because of the war and the short supply. So one has to look at it from a very long-term perspective. We do have plans to move away from coal over a period of time. This is not happening immediately. We have said we'll become net zero by 2045. So we do have a very longish window during which we can exit out of the coal companies. Uh, we will keep on monitoring the market, and whenever we find that this is the best market to divest, so we will take a call. But nothing, I would say, is immediately planned, at least for next month.
Mr. Sinha, let's talk about what's happening at Mundra as well, because we understand on account of the power shortage in Maharashtra, the state has actually tied up with the GPL for merchant sale of electricity. Should we expect a turnaround in Mundra on account of higher merchant sales?
So right now we are operating 3 units of Mundra, out of which nearly 1500 megawatt goes to Gujarat, and about 600 is going to Maharashtra. And we are still in the process of finalizing the agreement, which is the supplementary PPA for supply of this power. We hope to conclude this very shortly, wherein, based on the HPC formula, some arrangement is being finalized. And I hope it will be a win-win for everyone, because as a project owner and a developer, it is in our interest to operate the plant and supply. So also it is in the interest of the procurers who are today going through shortage of power supply, that they also procure power from this plant, as it still continues to be very, very economical. So there is a solution that is being worked out, and I'm very confident that it will get finalized very quickly.
Right, Mr. Sinan, what's your comment actually regarding the entire power sector situation in the country with the demand-supply deficit? Do you think the outages and shortages are they likely to continue throughout the year, or do you expect that this is likely to get better in a few weeks or months?
See, what has happened is that the coal supply and the generation is at its maximum. However, the demand has gone up tremendously, which was not anticipated. It's much more than what it was pre-COVID, even after considering the 5 to 6% growth on an annual basis. So, considering that the economy has bounced back and large amount of production is taking place in all the industries, commercial establishments are using maximum quantity of power, as also the residential. So there is a huge demand, and also the agriculture sector, because of the early onset of summer, is using huge quantity of power. And since we are expecting that we will have a long summer and a very hot summer months, so we do expect that the demand will only keep on increasing in the coming months till the monsoon comes, and there will be pressure on the supply of power.
Mr. Sinha, I'm going to ask you a bit of a longish question. So let me first start with the balance sheet. On the balance sheet side, you are actually taken back your initial guidance of reducing the net debt to 25,000 crore rupees going forward. So what is the trajectory that we should expect on that front? Will there be an increase on account of the fresh investments that you're making? As well, Mr. Sinha, the analysts are actually worried that the business lacks future growth triggers. What is your comment on that front, and what are the divestments and growth plans that you've planned for the company?
Our net debt has not gone up, in spite of the fact that in the last year we have invested nearly 6,000 crores in various of our businesses, whether it is a renewable business or EV charging or our distribution business and transmission business. In each of these businesses, we have put huge amount of money. Some of them are regulated, which will give us 15 to 16% regulated return plus some incentive. Some of them are non-regulated, which will give us much better much better market valuation. So I think our net debt, in spite of the fact that we have invested 6,000 crores, remains virtually the same. Our divestment plan continues to be there. Last year was little slow in divestment, but our payments from Arutmin is coming. Our divestment on the Zambia project and Georgia project is on track, and we should be able to complete it in this financial year. So I think we are very much there as far as our plans to divest from some of these investment and use that money for the future growth. So we have very aggressive again growth plan in the coming financial year, and we expect that in spite of such large growth, we'll generate enough EBITDA internally to cater to that, and we will not be required to increase our debt going forward.
Okay, Mr. Sinha, thank you so much today for joining in with us on ET Now. It's a pleasure having you on the show as always. With that, we'll actually slip into a very short break, but stay tuned in because we'll be back with all the stock queries that you all have. So send us your queries on WhatsApp or YouTube. So stay tuned in because we'll be bringing your queries on the other segment.